Welcome back everyone to the Money Control live stream. Well, a bit of a reality check, Santo, for the Bulls on the last street. I mean, after Tuesday's mega rally and the buzz of the midweek break, it seems that they've been confronted by a revival in the bearish sentiment. I mean, if you look at the Nifty and Sensex, clearly looking set to close deep in the red territory. The Nifty and Sensex both are down more than 1% at this point of time. But very curiously, the rupee has strengthened against Santo. If you look at the rupee market, the dollar to INR is about 79.35 compared to the close of 79.45 last time around. So clearly, very mixed signals from the market at this point of time.
Well, and very strange how the market suddenly reverse course midway, a strong opening, and I think the FI numbers for the previous session, that seems to have enthused a lot of players. And
but Santo, even there, I think there has been a little bit of a reality check because it turns out that the actual number was half of what was reported on Tuesday. So FI buying on Tuesday, by the way, those who don't know, the provisional numbers were about 4,166 odd crores, right?
Right.
And now the latest numbers that have come after, which is reported by the SEBI, that has come out around 2,200 crores. So that is almost a 50% cut in the amount of net buying market expected FIs to have done.
There's always been a discrepancy there, and for some reason that has never really been solved. But it does look as if there were some attempts to really get in everyone and then suddenly hammer the markets at least.
Yes, and also today's optional expiry of the options, Nifty options as well. So probably that might have also played some role. Do you think?
Possibly to some extent, but one thing which is more likely to happen is in this kind of volatility, a good chunk of the hot money is most likely to go out. So that could possibly put further pressure. Look at it, you got a not all that rosy macro picture, and fund flows to a pretty erratic. And if you see, domestic funds actually have been sellers in August, so that's also something that you cannot altogether ignore. So far, the market has been riding high.
So you think bears are here to stay?
They may not score in a big way, but clearly I think they can charge the onslaught of the bulls. That talk about the market making a new high, probably that's going to take far more effort than what it seemed till last week.
By Diwali?
Well, one can.
Well, I think
your guess is as good as mine.
Yeah, probably. Of course, anybody's guess is as good as anybody else's in the market. But clearly, it seems like the euphoria of Tuesday has fizzled out a little bit. I think there has been a little bit of a reality coming back in terms of the GDP number coming out, then the inflation dynamics globally, and the PMI data also. If you look at Santo, Asian and some of the European numbers that have come out so far, they are clearly indicating that the global economic engine is slowing down.
Well, all indications clearly are that the market should take a breather at this point in time, but hope eventually triumphs, I would say, CJ.
Always. Anyway, let's quickly move on to some of the stocks that were buzzing in trade today, and there were quite a few, but we have picked out the 4 stocks that were on our radar.
Starting with Kajaria Ceramics, this is one stock which managed to hold ground in a bearish market and has been steadily inching up over the last couple of months here. Jefferies is quite bullish overall on the housing sector, and when that is the case, by extension, you are bullish on also home improvement makers. Kajaria Ceramics is clearly riding that wave. Now, the company had given a very cautious guidance. It had given a volume guidance of close to about 15 to 20% for this financial year, but was not very sure about the margins, saying that gas supply is continuing to be a big problem at Morbi. But here's a positive twist also to that. According to Jefferies, there is increasing focus on exports by most tile makers, and Kajaria here is a player which is largely concentrated on the domestic market. So this should actually work to its advantage if most of its rivals are trying to move more aggressively into the export market. According to Jefferies, margins could expand by about 80 bips over the next couple of years, and it's very positive on the fact that Kajaria has been able to take price hikes in FY22 by a significant margin. That shows that there is clearly pricing power for Kajaria. So all these factors make a case for the outperformance of Kajaria Ceramics, at least in the short term. CJ.
Well, Santo, I don't think the bears will throw in the towel as far as the margin concerns are concerned in terms of Kajaria Ceramics, because clearly, if you look at the current scenario, gas prices have not really softened that much. If you look at the domestic gas prices I'm talking about, and international gas prices in fact surged even more, and they're expected to rise even further as and when the winter starts coming in Europe and US. Clearly, come the end of this month, we are expecting another revision in the administered gas prices that the government sets, and it is expected to be almost more than a 50% jump there. So clearly, the most important, fuel or, feedstock for ceramic makers, that is going to get even more expensive. So I have my doubts whether the company will be able to expand margins this year or probably even next year. We will have to wait and see. You would require a very sharp reduction in gas prices. And also, let's not forget that beyond a point of time, demand will start faltering if you keep on, passing on price hikes to consumers. Yes, Kajaria Ceramics is a dominant player, but ultimately you have to also keep the demand picture in the equation. And as far as demand per se is concerned, of course, the big question mark at this point of time is about the rural sector. What will happen given the erratic monsoon, given the decline in some of the sowing of crops? People also, let's not forget, are expecting a decline in Kharif sowing of crops going ahead. So clearly, if rural demand does not come back, then construction sector demand could also, at least in terms of home improvement, could take a knock ahead of Diwali and the festive season. So that is something that I would be a little cautious about when it comes to Kajaria Ceramics.
The market seems to be overlooking these factors.
It seems so.
I think a detailed pitch on behalf of the bears.
Yeah, I think Santo, if you look at it, I think the argument clearly, the biggest argument is that margins probably have bottomed out in Q2 or will bottom out in Q2, and therefore second half onwards you can see a revival. But if you have to believe the international commentators on as far as energy prices are concerned, it seems like there is something that the bulls have to take note of. Well, one stock where there are no such concerns, at least for the time being, it seems, is SRF. Well, they hosted an analyst meeting with a lot of their people or analysts out there who track the company on Tuesday, and all of the analysts have come out with some spectacular reports when it comes to SRF. The company has unveiled a 15,000 crore capex plan, Santo, especially in the chemical segment. They believe that there is enough demand out there to justify investing this much amount of money in capacity expansion. Let's not forget that India is gaining a lot of market share in the international export market as far as chemicals is concerned, especially specialty chemicals, because China has been dragging its feet because of the COVID pandemic. SRF now is expecting growth of more than 20%, north of 20% in its chemical segment alone over the next coming few years. So clearly, a lot of analysts are believing that this capex could catapult the company into a different stratosphere altogether, and therefore you have seen the stock surge almost 3.5 to 4% in trade today.
Well, just going through a report based on the same analyst meet by ICICI Securities. So, a couple of red flags there. One is that yes, the company's all engines, all cylinders are firing at this point in time. Yeah. So there's no mistaking that, and it's pretty much in a sweet spot. But maybe the valuations are already reflecting that, and that's why ICICI Securities has downgraded its rating on the stock. That's one part.
That's very interesting.
CJ, also this investment, the capex plan which the company has lined up is pretty aggressive. 15,000 crore is like really huge, considering that it is nowhere close to the initial targets that the company had set. So there's a huge quantum jump there, 15,000 crores. How is the company going to raise that? There probably will be a fair bit of debt and also equity dilution. These couple of factors, I think, should make investors little cautious.
I think Santo, the only thing about SRF is that their balance sheet is quite strong. I think they don't have that much debt on their balance sheet that it would probably become a concern for equity investor out there in terms of diluting their return profile. Apart from that, of course, this is a dichotomy between the chemical sector and the metals or the commodity space. In commodity space, and investors don't want you to do capex, right? They don't. They want capacity to be constrained so that you have more pricing power. Whereas the chemical sector is concerned, there, if you announce capex plans, you will probably be at the top of the chart in terms of buying list of investors, because there you're expanding your footprint, you're expanding your market share. And I think that is where a lot of investors are looking at this, given the fact that India still consists only a very small percentage of global chemical exports.
That holds true, CJ, but I'm also reminded by a line by the legendary investor Stanley Druckenmiller. In one of his interviews, he was asked, how do you play the commodity stocks? And he said that one of the signals to book profits is when you suddenly see a lot of capacity being added. Probably that is the time to get out. Of course,
maybe it's the contrary and for chemicals. Who knows? Maybe 10 years down the line, people will be quoting us.
But because it's not just SRF. If you look at every chemical company at this point in time is adding capacity in a big way. So it's inevitable that at some point in time there will clearly be a glut.
I think,
Maybe in the distant
I
future.
think for those who, of course, sorry, beg your pardon to interject you, Santo. For those who just want to, get deep into this, I would suggest reading some of the articles that have been written about the French chemical sector from the 1980s onward, or not only the French, the entire EU chemical sector from 1980s onwards. And a lot of analysts here believe that we are also in that similar phase where chemical sector expanded very rapidly between 85 and 2005 in Europe, and something similar maybe is taking place in India.
Probably if you look at the price action in many of the stocks, of course SRF seems to be a bit of an exception. The stock has done pretty well compared to many of its peers, but everyone ultimately seems to be headed in the same direction. Excess capacity, huge ambitious capacity expansion plans, CJ.
Yeah, I mean that is right now the nature or the name of the game as far as chemical sector is concerned.
Yeah, when there's a party on, obviously you have to just go in there and dance there. You can't avoid that. Well, next stock on my watch list is Ramco Cement. This has not been a great season for cement companies in general, and if you look at the first quarter numbers of almost all players, the decline, the pressure on stock prices seem pretty valid. Ramco has somehow been an exception, and over the last month or so, the stock has been steadily climbing. In fact, it's gained close to about 15% from its lows. Now, the numbers were quite weak if you compare it on a year-on-year basis, but if you look at it sequentially, realizations, volume growth, everything was slightly higher. Now, a big drag was the increase in power and fuel costs. The company is trying to do something about the power cost. It said that it would use all the wind power that it generates at its facilities, and that in turn would provide it a lot of cushion. Company has also guided for about 15% increase in volumes this year. Now, remember, freight and power costs, these are expected to ease a little bit. At least they are not likely to be as high as they were in the past.
Yeah,
so
at least on a sequential basis, yes.
So, there is going to be some relief on the margin front. Besides, Ramco Cement's clinkering plant at Kurnool, the trial production has already started there. So, that overall clinkering capacity has now increased to close to about 13.65 million tons. And lastly, there is the dry mix product side of Ramco Cements besides its main cement business at its plants in TN, Odisha and Andhra Pradesh, where it makes value added products like waterproofing and repair products. So, it is investing in these products also in a big way. So, these are some of the triggers, the levers for the stock at this point in time, probably which is leading market to take a bullish view on it.
Well, Santo, Ramco was, I mean, before this entire, the view changed on the cement sector because of higher fuel costs and also the entry of a new competitor. Ramco was one of the, favored picks for a lot of investors out there, especially in the mid-cap cement space. But clearly, I think a lot of people expected that cost pressures for cement companies in particular will bottom out in the second quarter because of the decline that we have seen in global crude oil prices in general. But recently, if you look at pet coke prices, that is something that could be a concern, although it did decline very sharply from about the March-April highs to back in July. But since July, end of July, there has been again a revival in pet coke prices. So that is something probably makes me a little cautious on the amount of recovery that we could see in the margins as far as Ramco is concerned. Also, let's not forget, according to a few analysts, Ramco, out of most of the cement companies, lacks pricing power when it comes to the monsoon season. So, any increase in cost for the company, it is very unlikely that it would have been able to pass it on to consumers during the monsoon season. At least we'll have to wait and see whether that will be the case in the December quarter as well. And lastly, Yes Securities, after the company's earnings during the June quarter, Yes Securities had actually downgraded its rating from buy to add because it felt that the recent rally was probably a bit stretched, and at this point of time a pause would be required in the stock. So I think if you look at it, the market seems a little divided on both sides. Clearly there are arguments, there is case to be made for both the bulls and the bears, but at this point of time a little cautious given the rally that we have already seen.
Well, the market, stocks running ahead of itself. Ramco is not the only one I can.
Possibly. Santo, last stock on my radar today is Zee Entertainment. Zee Entertainment is in news today. The stock fell about 4.5% earlier in trade after CCI, or the Competition Commission of India, raised a few questions or concerns about the company's merger or impending merger with Sony India. And the concerns were largely around whether the merged entity would be enjoying too much of a bargaining power when it comes to the TV market in India, especially in certain categories. There are 4 major categories where Sony India or the merged entity could have very, very high market share, and therefore could pressure, into consumers into paying more for the television network that they are selling. Apart from that, of course, if you look at what brokerages had to say, they feel that if you look at the overall TV market, then Sony, the merged entities market share will only be 26%, and that should not be a major concern as far as anti-monopoly practices are concerned for CCI. So they don't feel that this could be a major issue in terms of breaking the deal. But what it will do is that there could be a possible delay. Now the other thing is that Sony India and Zee are expecting approval from NCLAT as well. Now that process will take about 7 to 9 months. The hope is that by that time the NCLAT approval comes, they can also sort out the issues with CCI. So therefore both the approvals might come within the same timeline. If that doesn't happen, then of course you could expect the stock to remain under pressure.
Well, a couple of things that would make investors a bit worry on betting on Zee at this point in time. Of course, the big hope of re-rating, which started sometime last October, that has not really played out. That's one part. There's been delays along the way, and at this point, advertising revenues appear to be a bit under pressure, especially its biggest clientele, which is FMCG companies themselves, are facing a lot of pressure. So that has led to some cutback, and which the company had also warned of. Besides, investors will also be waiting to see some kind of clarity here. So this is clearly an overhang. Maybe it will get decided in Zee's favor, one doesn't know. But till that time, I think there will be nervousness, given that the overall business environment too doesn't seem to be too favorable at this point in time. Its linear TV has not been doing all that well. That's been one of the major factors which has led to the stock's underperformance for a while. Maybe, there's one of those stocks where if you're willing to risk big, probably, and if things move in your favor, the reward could be clearly bigger. But it's a very strategic bet.
I think, Santo, as far as the ad sales are concerned, I think that is something that a lot of people are expecting a rebound in the second half, largely because you have the festive period. Generally, ad sales tend to be quite strong during that period. And secondly, the FMCG space that you mentioned, that is another sector where people are expecting a rebound in margins going ahead. So therefore, all the cutbacks on promotional costs and marketing costs that FMCG companies have been taking over the past year could get reversed, and that could be beneficial as far as advertisement sales are concerned.
FMCG calls for a different debate altogether, and looking at the GDP numbers, I wouldn't be so optimistic. With that, let's quickly take a look at how the market is faring at this point in time. Overall, the mood is bearish, and I think, CJ, we are likely to end down today. 17,554 on the Nifty, that's down close to about 1.2%.
Yes, Santo, I think although there has been a little bit of a recovery, actually quite a sharp recovery in the Nifty Bank, in the sense that we are only down about 0.65% on the Nifty Bank at this point of time compared to almost a 2% cut earlier in the day. But clearly, the benchmark indices is where the concern is at this point of time. If you look at the Nifty, Sensex, both are down over 1%. The small cap space is still doing a little better, I think, Santo. If you look at the Nifty Small Cap 100 Index, it's in the green, so it's closing in the green. And this theory or this trend that we are seeing of mid cap and small cap outperformance, that clearly continues. The Nifty Mid Cap 100 Index is also in the green, higher by about 0.2%.
It almost seems like doesn't matter where the index is, just pump in a lot of money into mid caps and everything will be fine.
Also, Santo, I think it also represents the market's view that the domestic economy is in very good health, and therefore probably if you're betting on India at this point of time, you're likely to be making money, not only protecting your money but also making money. Whereas anything that has any tinge of global, global angle to it, it's getting derated very sharply.
Well, and what do we have to keep an eye out for, CJ?
Well, Santo, not much, but economic data, of course, is the first few days of the month. So clearly, a lot of economic data comes out. We have seen, manufacturing PMI data come out here, but later in the evening, US will report its August PMI, manufacturing PMI data. That is something to watch out for. Apart from that, you have the weekly initial jobless claims data that also will come out later in the evening. Last week's data was quite surprising and very strong. So it will be very interesting to see whether this week also we see a similar trend, and that will probably end up confusing the market even more.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again tomorrow morning at 9 a.m. Till then, have a great day.